Thanks for joining us for the Executive Series. Today I'm speaking to Mike Conahan, who is the Managing Director of WPP, Australia New Zealand. Mike, good to talk to you.
Thanks for having me.
Now, you've just reported your results.
Yep.
In a pretty challenging operating environment, your revenue was up by the better part of 14%, NPAT up by more than 12%. That's not a bad outcome in what's a pretty challenging digital space at the moment.
I think you're taking a look at the very generous view of our accounts, but yeah, I mean the main thing for us is the profit was up 3%, EPS up 3%.
I mean, underlying profit was up by 12%.
No, of course,
Yep.
but you know, I think EPS at 3% was a little bit above expectations. We had guided the market last September that sort of down towards the between 2 and 4, so we hit the sort of the top end of that. And importantly, we've really looked after our cash very well. Our balance sheet's in good health. We're down to 1.6 times EBITDA now on the leverage, and the dividend is up again 5%. We've got a stated dividend policy of between 60 and 70% of earnings. We only paid 64%, but it's still up. And on today's price, that's a yield over 6%. So now with the balance sheet in such good health, there's certainly room to have a look at that dividend to maybe keep that going on the upside, and maybe some other capital management initiatives.
Yeah, I wasn't necessarily being flattering. I was just probably more pointing towards the fact that it's not difficult to come unstuck.
Yeah, look, I think
in the media space, if you're not being faithful to your strategy.
In our environment, it's tough, right? So our clients are under pressure. We obviously face every single part of the economy, every government, every financial institution, every FMCG, every automobile, all the media companies, we're their biggest customer. So Australia and New Zealand are mature markets that we operate in, and B, growth is hard to come by. The economy's been pretty tepid now for quite a few years. So to get any growth out of that, I think, is an achievement. You're right. We have a wide portfolio of companies. Some of those did not do very well, and if you look at the divisional results, it was a bit of a two-speed result. So the advertising and media companies actually had fantastic results in a pretty tough market, but in the what we call data investment management, which is the research businesses, they were not fantastic. And some of our production businesses really let us down last year. We have taken great sort of strides in fixing those up, and we're hoping that we won't have a repeat of that this year, and continued momentum in the advertising and media sector of our business.
How do you fix things up in the production side of things? Because that's reasonably commoditised.
Look, we've got scale in production. What we do have there is it's an unusual business for us in that it's a high fixed cost business, as in most of our businesses are very much about the people. In production, you do have to have the equipment and the kit, and we've been investing in that last year, it's also fair to say. So we want to create a what we'd call a horizontal production business across our group, so all of the production and content that comes through our agencies for our clients can be serviced through that in the most efficient and cost-effective way for our clients. So there's been some investment there, but it's fair to say that business with a high fixed cost, it needs the revenue coming in the top to really deliver the profit on the bottom line for us. And last year we didn't get that right. We've changed some management. We've made that investment in some new kit. So we're very hopeful this year that we'll have a good result out of our production division.
Now, your strategy, as far as the medium term, really turns around delivering on a customer experience outcome. Yep. It sounds like a no-brainer, but why is this important to you guys?
Things have changed so much in our industry and continue to change very quickly. So we talk about a customer journey now, and our clients are facing an ever more complex media environment. The way that they can communicate with their consumers, find new consumers, get innovation out into the marketplace is complex, and a group like ours can give an end-to-end solution, a more holistic approach to that customer journey, be very agnostic as to which way we go after those customers. So that's our offer. We're a group of scale in this market. We do bring the best of a global powerhouse such as WPP, who's our partner, with some amazing local companies as well. We've got the perfect mix of local clients, and that's very important.
Give us an example of what you can draw on from WPP internationally.
So globally, WPP is a mirror of us in that they're the largest globally, and so they're the biggest buyer of media. They're the biggest procurer of digital technology in our space. The data power that they have is pretty amazing, and the investments that they can make into that tech stack that we could never ever consider. So just last week, Group M were down here talking about addressable TV. So the holy grail for broadcast and cable TV is to be able to target individual advertising messages to the individual user. WPP are an investor into that tech, and they've done a deal down here in Australia. We'll be the third or fourth country in the world to have that rolled out. So that's an amazing opportunity for us and our clients, but also for the medium of TV, which is by far the most powerful way to market still for all our clients.
Indeed. So how do you continue treading water in this difficult climate and wait for the tipping point?
Yeah, look, we think that 2018 will be a more positive year. That's certainly the soundings we've got. So in October, when we came to the market and said we'd had a tough third quarter, the September quarter, then in October, November, December, and in January of this year, we've beaten forecasts. So that's a very positive sign for us to have a good end and a fast start. We think the media market on the whole will be up about 4% this year, and it's been more to the 1% to 2% over the last few years. So it'll be up 4%. Traditional media we think is bouncing back: TV, press, radio. There's been an adjustment away from digital, so digital's slowed. It's still growing, as of course it will.
Not at the rate that you saw,
but not at the rate we've seen. So we think media investment's going to be strong. It's only one proxy for our business, but it's an important one. Government appears to be quite active, both state and federal. We've got the Commonwealth Games this year, so there's a lot of positive signs in the economy in general that we can look to, but also market share for us is important. We're always going to face a market, be it expanding, contracting, and we've just got to take more than our fair share. And we think we've got the people, the talent, and the companies, and certainly the right client mix to take advantage.
Mike, it's always good talking to you. Thanks for your time.
Thanks very much for having me.
And thanks for joining us for the Executive Series.